Good afternoon, everyone. My name is John Jiminod, Regional VP here at Angel Oak Mortgage Solutions. Hope everyone's having a great May. We're going to get started here in about a minute and a half. We're going to let everyone log in. And at that time, I'll introduce our two subject matter experts. So um, this is an interactive webinar today. I'll ask any of your questions in the question queue. We'll get them answered. If we don't, one of our account executives across the country will reach out to you no later than tomorrow. So anyway, today we're going to talk about our debt service coverage ratio, which has become the most popular program here at Angel Oak when it comes to units. And it's a great program. And we hope you learn a lot today. This is going to be recorded. We will get this recording out to you before end of day tomorrow. So give it about another 30 seconds and we'll get started. Oscar, Jack, how you guys doing today?
Good.
Good. How are you, John?
I'm good. Fired up. We haven't done one of these in over a month, so I'm really excited. So, all right, let's get started here. Again, my name is John Jiminod, Regional Executive Vice President of Production here at Angel Oak. I'm here today with Oscar. If you've been on our webinars before, you know Oscar. Oscar, please introduce yourself.
Hey everybody, my name's Oscar. I'm an account executive here at Angel Oak. I've been here for almost 8 years now. I'm out of South Florida, and I'm always excited to jump on any DSCR webinar simply because it, like John said, it is one of the, if not the most popular program in the non-QM space.
Yeah. And a new to our webinar here, and I love giving Jack a hard time. Jack Stevenson, please introduce yourself.
Hey everyone, I'm Jack Stevenson. Been with Angel Oak for 5 years. Extremely excited to hop on this one. Finally, John gave me a ring and invited me on, so I'm excited to be here. Always pumped to talk about programs and deep dive into DSCR.
Yeah, and Oscar, I didn't do you justice introducing you. Oscar's always a top producer here, and Jack is quickly moving up the ranks here. So hopefully next year, Jack will be in the top 10. And I think, doing these webinars definitely will help you get there. So again, this is being recorded. We will get this out to you before end of day tomorrow. But before we dive into the debt service coverage ratio program, we're going to do a quick poll. And the poll is, have you originated a debt service coverage ratio program in the last 12 months? So I'm anxious to see the results because as popular as this program continues to be, and that's probably why you're on this webinar, because you want to learn more about it. But let's see, let me put on my glasses here. Give it about another 30 seconds for people to give some feedback. Let's see. Can they see the poll? Oh, did I not launch it? Can you guys see the poll?
Yes, we can.
Yes.
Okay. Can you see?
The votes are still coming in.
Okay. Thank you, Oscar. Appreciate that.
All right. This is actually a great group so far. We're pretty neck and neck between yes and no.
Okay. I can't see it for some reason, so.
Yeah, it's about 50-50, 37 to 37.
That's great. I mean, that's Oscar, you've been on these before. It's usually like 65, 70, have not?
Yeah, we were just 50-50. So we have a lot of experience on the call. And then, obviously welcome to everybody that has not done a DSCR loan yet. We're excited to have you on, and you're going to be experts by the end of this call.
Yeah, and Oscar, I can't remember the last time we did a DSCR short-term rental, but we've had some enhancements to the DSCR. So hopefully, if you haven't joined us in a while, you'll hear about some of our enhancements. So, Oscar, let's go right into it. Everything we're going to do today. This is not a PowerPoint. This isn't pre-packaged. Everything is from our website. We're going to do here today, and again, this is being recorded. So. All right, Oscar, let's go to the DSCR loan. Give us some highlights.
All right, everybody. So You can find a lot of information on our website. It is angeloakms.com. You were just looking at the homepage. When you want to look at any sort of DSCR highlights, all you have to do is click on mortgage programs and then on DSCR loan, and you'll land on this page. So before I get started on actual key highlights, for all of those of you that are new and that have not done a DSCR loan yet, let's go over what does DSCR stand for. It stands for debt service coverage ratio. That's just a complicated way of asking, does the subject property cash flow or not? On a DSCR loan, DSCR replaces DTI. There is no personal income or liabilities on the program. So Jack's going to be talking about what we do require and what is not required on the 1003. And so one of those things will be income and employment, or two of those things will be income and employment. They're not necessarily on the application. So DSCR replaces DTI. And the way that that's calculated is by dividing the rent by the total housing payment. So PITI or PITIA. Now, the max LTV, which is a niche and is an enhancement, is 85% up to 720. I would say that that is a fantastic niche for all of you. 15% down on a 2 to 4 unit property with no income or employment or liabilities considered is a huge opportunity. The program does go down to a 680 FICO score, up to 75 LTV. And let's start covering our loan amounts. So the max loan amount on the program is $3 million with a minimum loan amount of $100,000. We do get plenty of questions on what our minimum loan amount is on the program. So it is $100,000. You can do a purchase, cash out, or rate and term. As John mentioned, short-term rentals are allowed. And so this is a huge enhancement on the program because it does put you in the driver's seat. Now, for all of those of you that were probably asking yourselves, well, where do we get the rent from? How do you come up with the rent to actually come up with the DSCR formula? So on a purchase, the rent's going to be based off of the 1007, which is the rent schedule. And the appraiser is going to come up with an average market rent. So we always need a 1007 on DSCR loans. However, if you have a client whose preference and use of the property will be short-term rent, then that puts you in the driver's seat, because unlike with an annual rent where we have to wait on the appraiser's opinion of what the average market rent is, with short-term rent, you have access to airdna.co, which is a third-party company, and we're going to use the property earnings potential report. Now, last I checked, there is still a free version of AirDNA that does give you the property earnings potential report, but we can also run that for you. And we're just going to use the projected revenue on that report and divide that over 12 months. And that will be the monthly expected income, estimated income. And that's what we will be using, even though we do require the 1007. So that puts you in the driver's seat because you can immediately figure out and structure your loan based on your rent rather than waiting on your rent.
And Oscar, just to add on to that, add on a little bit to that. If you're an experienced DSCR loan closer, you should be licking your chops at this, because if you have struggles in underwriting, restructuring your loan, you can structure your loan in the first 24 hours up front before we even get to underwriting, not even reliant on the appraisal. Now, you still have to order a 1007, but you should be ready to go within the first 24 hours of submitting your pre-qualification.
Yeah, you're right. Absolutely. So like I said, it puts you in control of your loan, and on a purchase, that's really important, right? There are other ways, especially if you're using annual rent, and Jack and I, we both use these along with our customers whenever someone has a DSCR loan, of just getting an estimate of what your projected rent may be. You can use Zillow's estimate, their websites like renometer.com, just to get an idea of what the rent might be, but it isn't for sure until that appraisal comes back. Using AirDNA, and if it is going to be a short-term rental property, that is what we will use. So Jack is absolutely right there. Now, when we do use short-term rent, the max LTV is 75% on a purchase, so keep that in mind. If we're using short-term rent, which we do allow on a refi, we're going to use the current rent. And there, that also puts you in the driver's seat and in control of structuring your loan, because all you need to do is ask your client for the transaction report or the earnings report that they had over the last 12 months on that property, and just 2 months of statements to verify that those funds are deposited into their account. That's it. You average those out over 12 months, and that's what your monthly income is. So it's very easy. This is a very simple program. And as many of us say, it is nearly bulletproof. Right? It is a nearly bulletproof loan program because let's say that you are not cash flowing. There are still options for your client as long as they meet the credit requirement and as long as they have the assets. So that'll take us to the next bullet. Next bullet point down is we allow DSCR less than 1. We also allow what's called a no DSCR option. So at a DSCR less than 1, that means that our rent is only covering a percentage of our total housing payment. So I'm just going to give you an example. Let's say that the rent is $800, but your PITI is 1,000. When you divide that, that is only 80% or 0.8 coverage, right? And John's just giving you some examples here on the screen. You still have options for your client as long as they meet the credit requirements. So my rule of thumb is 700 credit and up, you have a loan, as long as they have the assets for it, right? We were okay on purchases at 75 LTV if the ratio is below 1 down to 0.8. We're also fine if the ratio is below 0.8, and that is called no ratio, but that will be at a 65 LTV, so 70 LTV on a purchase. On refis, you have the same opportunity. Refis are up to 75 LTV. However, we can allow below 1 down to 0.8 or below 0.8 at 70 and 65 LTV. So the chances are there for you to get your loan done. Now, as I mentioned earlier, no income or employment required on the program. Everything's based off of cash flow. Got this question asked the other day, Oscar, I have a customer who has 11 properties and they want to refi 11. But I noticed that on your website, it says you allow a max of 5 for the borrower. Can you make an exception? The answer is yes, we can make exceptions. Nearly 30% of the loans that we close have exceptions on them. So make sure to reach out to your account executive if you ever come across that, because this program has no finance property limit. So, we do tend to see, especially on refis, multiple loans, and I'm sure Jack's had a few of them, right, Jack? Multiple loans, more than a few, I would say a lot, right? Multiple loans from one borrower at a time. So
Yes.
the refi
I was just going to add on, like right now,
Yeah.
I've got a 7-pack for one borrower in underwriting. So exceptions allowed. So don't let that stop you from submitting your pre-quals.
Yeah, it's really common to see multiple loans from one borrower on refis, and we see multiple loans from one borrower on purchases throughout the year. So this isn't just a program for just a customer that will. These are repeat clients of yours, right? A DSCR customer is a customer for life. So no finance property limit. Now, first-time home. This is not meant for first-time home buyers. So we do want to check that the borrower has a primary residence at a minimum. That should be a key question that you ask your customers whenever you're going to vet them. Primary questions you'll ask: do you own a primary residence? What is your credit score? And if it's a purchase, essentially check assets. You want to make sure that your client has at least the 3 months reserves that are required on the subject property, which is also a key enhancement that we made on the program. We now allow down to 3 months.
Yeah, it's funny you say that, Oscar. That's what Chris was asking. What are the assets? Are there different assets? Because Chris is asking this question, Oscar. Are there different assets dependent upon the debt service coverage ratio?
So different assets and different LTVs.
Reserves,
there are
sorry.
different LTVs. You're absolutely right that there are different LTVs based on the DSCR ratio. So if you happen to have negative cash flow, then the loan to value will go down by about 5 to 10%, depending on.
Yeah, but the question is,
Uh-huh.
I'm sorry, Oscar, but the question is, do the reserves that are required change
No.
by? Okay, thank you. So
No,
Chris,
the reserves
hopefully
don't
that
change.
answers your question.
The reserve requirement is the same. It's only 3 months on the subject property. So I mentioned that We see a lot of borrowers on this program who have a lot of finance properties, and we have no finance property limit, but we only need 3 months reserves on the subject property. And because we're talking about refi, I mentioned refis, cash out can be used to satisfy the reserve requirement, which is another common question that we're asked.
And Oscar, to kind of branch off of that too, we're only verifying mortgage history for mortgages reporting on credit, primary, and subject property. That's huge because if the
Yep.
borrower has 20 properties, let's say a bunch of those are private mortgages, that can become a nightmare in underwriting.
Oh yeah.
This saves you right here. We're only verifying mortgages reporting on credit, primary, and subject property.
Hey,
Yep.
Jack, while you're running hot there, what about a lot of times when you get these multi-packs, what are they? And I might be asking a question I don't know the answer to, which is not good, but are they being assigned to the same underwriter?
Yes, they are. They're the same underwriter, which is huge because last thing you want is 4 different underwriters touching your 7 loans. And all of a sudden they're every which way talking with each other, trying to it becomes a nightmare. So one underwriter per borrower. At a time, you throw through X amount of loans with that
Yeah.
specific borrower.
Thank you.
John, I apologize if I steal your thunder here, but these are some stats that you always mention. And so just because we're talking about opportunities here, we are seeing a lot of cash out. We're seeing a bit of a refi boom this year. And so the primary reason for that is that homeowners in the US are sitting on about 35 trillion in home equity. Nearly 40% of homeowners have a free and clear property. So there are a lot of cash out opportunities, guys. You do not want to underestimate the demand that your clients have for cash right now.
Yeah, and Oscar, I'll throw one on top of that, and you do a great job with all those. The average home across the United States has appreciated since 2019 almost 50%. So that's another, that's why you bring it up perfectly. That's why these and we allow the first time investor here, but that's why Jack is seeing and Oscar's seeing multi-packs because these veteran investors are seeing the appreciation and they're cashing out and they're going to continue to build their portfolio.
Mm-hmm. And
Yep.
right now, rates and pricing is really competitive. We're seeing a lot of customers that are comparing costs between traditional financing and to DSCR loans. And sometimes it isn't just a more streamlined loan. It may actually cost your client less. So you do want to check anytime that you have an investment property, whether it be a purchase or refi, just double check the numbers. You may find that a DSCR loan is a better option for your client. Now, very important question because you will see this a lot on DSCR loans. A lot of customers want to limit their liability on the property. So for that, they want to vest title in a corporation. So we can vest title in an LLC, an S Corp, a C Corp, or a revocable trust. The key question that you need to ask your client there is, what ownership do you have of that corporation? Are you 100% owner, or is there another party on it? If there are other parties on it and they'd like that person to be part of the loan, they can be. They're also going to need to be pre-qualified. But if there's another person who they do not want to be on the loan, on that LLC or S Corp or C Corp that they want to vest title in, they can create a new one. There's no seasoning period for how long it's been open, as long as it's been open to manage real estate. That's really it. Now, the program isn't limited to U.S. citizens. We can lend to permanent resident aliens and non-permanent resident aliens, and that has been a big topic lately. So we can lend to non-permanent resident aliens. At the moment, there is currently, we offer all kinds of flexibilities on the EAD card. There's only one card category that we cannot accept, which is C18. That is it. As long as they have their social security card, we're perfectly fine with non-permanent resident aliens. Seller concessions, we will go up to 6%. Gift funds, it's another enhancement that we made. At an 80 LTV, as long as the borrower has 10% of the purchase price and the 3 months of reserves being their own funds, the rest can be gifted from a family member. And being here in Florida, we get these questions a lot. Oscar, can you lend on condo tells on the DSCR program? Absolutely. We don't just see that in Florida. We see that in a lot of vacation areas where you have condo projects that have a high concentration of short-term rent. Sometimes the HOA is actually managing the nightly or daily rentals. We're perfectly fine with that. We do lend on condo tells on the program up to 75 LTV. Non-warrantable condos are a very hot topic, and now they're becoming very common across the country. So non-warrantable condos aren't just exclusive to DSCR loans, but we do lend on them. And you want to make sure to ask, what is the reason why the project is non-warrantable? So we have appetites for non-warrantable condos. The main reasons we see non-warrantable condos will be, insurance. The deductibles exceeding 5% will go up to 10%. You may have high investment concentration. So you may have 100 units in the project and 100 of them are non-owner. We're okay with that scenario. Litigation that's not structural or a safety hazard, we can always consider, and you can send that to us up front. We prefer to review the condo questionnaire prior to you even requesting disclosures. You have that option with us.
Hey,
So
Oscar, let me ask a question here because
yeah.
Ron's asking it because you just got done talking about non-warrantable condos. Do
Mhm.
we reduce the LTV for a non-warrantable condo?
Just because the condo project is non-warrantable, no. You want to ask what the reason for it being non-warrantable, because if that reason happens to be that there are no reserves, then there could be an LTV limit. So that is a flexibility that we offer for non-warrantable. Across the country, you get plenty of scenarios where you come across condo projects that do not have reserves or have very limited reserves, less than 10%. We're fine with that. Let's say that they have less than 10%. Let's say they have between greater than 5 up to 10, less than 10. We're okay at an 80 loan to value, which on this program used to be the standard LTV. Now, let's say they have zero reserves, then the max loan to value is going to be 69. But we do allow no reserves on the program. That will be the only time on a non-rentable condo where you're capping it. Aside from condo tell is max 75 and exclusive to the DSCR program. And just before this call, Jack reminded us that there are plenty of states where you do not need to be licensed. All these states are here on our website. If you want to do business in any of these states, if you want to do DSCR loans in any of these states and you're not licensed, just below that, there's a link that you can click to a fillable PDF for our business purpose disclosure. Fill that out, and you can originate DSCR loans in any one of those states.
Great. We'll get to some of these questions here. I want Jack to, you touched on it briefly. I want Jack to talk about the 1003, what you like to see, what we don't want to see, and then just really trade lines that we're looking for. And I'll let you run, Jack.
Of course. Yep. So on the 1003 employment section, income, forget about it, right? Don't disclose that. Don't tell us that information because the DSCR doesn't require it, right? We're using the cash flow of the property, cash flow analysis of the property for qualifying income ultimately on the program. So do not disclose employment history, do not disclose income. None of that's going to be required, just your real estate owned. For the real estate owned, by the way, only disclose mortgages reporting on credit, the primary residence and subject property. Okay. So the REO section, those are the only properties you want to disclose. Under the employment section, you're going to completely just wipe the employment section, $0 of income, no employment history. And yeah, that pretty much wraps up the 1003. I don't think I'm missing anything there.
Nope.
I'm going to add one thing. I mentioned that refis, you're in control of structuring your loan because we're going to use the current rent. So it's helpful if you include the current rent on the 1003. And that's because for those of you who haven't worked with us yet, you have the option to send us the 1003 in credit prior to you even requesting disclosure. This way you do not need to vet guidelines or anything like that. Here at Angel Oak, we can essentially pre-underwrite your file with your 1003 and credit. The analogy that I use is you don't just submit a loan up to underwriting on a Fannie Mae or Freddie loan just to see if it sticks, right? You're going to run DU and LP to get you approved eligible. We have the same thought process. You share the 1003 and credit with us. Your AE is going to look it over. We're going to be your second set of eyes. We're up to date on our guidelines. And so if there's anything that we see that you may need to, that, we need to make a note of and, review with you or ask those second or third level questions, we will.
And we're always going to resort to the fair market rent value on a refinance transaction as long as it's tenant occupied. So that's something you want to advise us on is, hey, if there's a tenant, what are they renting it out for? So let us know, especially at the pre-qual stage.
Yep.
Yep. As for trade lines, I guess I'll jump over to trade lines real quick. So we're 2 trade lines of 24 months or 3 of 12-month history, revolving installments, mortgages. That is what we require on the program. If you have an applicant, co-applicant, as long as they, combined have that, typically would be an exception, but we can get those through as well.
Hey, Jack, touch on, when we talk about credit, you're talking about credit. One of the other recent enhancements, talk about the highest middle score for all borrowers.
Yeah, that's huge. So we go based off of the highest mid FICO score now for 2 applicants on a loan. A great example here would be, let's say you have an LLC vested on title, right? And let's make it somewhat simple. 2 owners own this LLC. We would need both of them on our loan, but let's say one of their scores is 650 mid FICO score. The other one is 720. We would be able to proceed with that 720 FICO score for qualifying purposes, okay? As long as the other borrower meets minimum credit requirements, their score doesn't have to be 680 to qualify on the program, okay? So again, that's huge for vesting LLCs on title, for refinancing. We go based off the higher of the 2 mid FICOs on the DSCR program.
Yeah, so thanks, Jack. Appreciate that. So let's get into some of these questions here. Partner and I are not legally, okay. If a condo is non-warrantable due to having decks, this is asked from Ron, having decks replaced, and you mentioned this, Oscar, when you went over the highlights, that would be considered structural, right? If the decks are being replaced?
Yeah, I mean, it's something that I would say that's something that we can look at, but is the question there is, is it leaking? Is there something wrong with the pool deck? Is it leaking into other condos below it? That would be an issue.
Right.
Now, if they're just renewing it, remodeling it, that isn't necessarily a problem.
I don't know why this question box is. I guess the REOs, Jack, if you want to pick up on that, only maybe reiterate what you said. The only ones listed on credit are the ones you're going to want listed.
Yeah, of course. Sorry if I bled into the next section, but yeah, for REOs, we're only verifying mortgages reporting on credit, subject property, and primary residence. So with those 3 things in mind, if you've got 20 properties, right, and let's just say you're refinancing 1 property, borrower only needs 1 of them refinanced and cashing out on. We're not having to verify all of the private mortgages that aren't reporting on credit. It's just subject property, primary residence, and any mortgages reporting on credit. So huge advantage on the DSCR program. If for seasoned investors, for high net worth clients with 30 properties, instead of sending them down another route and closing in 90 days, why don't you just go DSCR and not have to verify any of that history on private mortgages that are not reporting on credit, subject property, and primary residence.
Thank you, Oscar. Jack, sorry about that.
Hey,
Next question
right.
is for Oscar. Sean is asking a really good question, and you went over the permanent, non-permanent resident borrowers will lend on. So, but Shauna's question, and I know where you're going to go with this, Oscar, can you lend on condos in Osceola County, Florida? In the past, we could not, and maybe talk about foreign nationals versus our borrowers here.
Sure. So Osceola, Osceola is not allowed for foreign
No,
nationals.
for foreign nationals. So
Right.
let me clarify. So we can do foreign nationals on our debt service coverage ratio, but we will not lend on a foreign national in Osceola County.
Correct.
Um, but we will lend in Osceola County on
Yes.
the debt
Yeah.
service. Yeah.
Uh-huh.
So Shauna, hopefully I didn't confuse me, you, and Oscar here. So uh, other questions here. Let me see some other ones that we've had. Um, so one of the other questions coming here, Jack, we talked, Oscar mentioned it earlier. Maybe someone jumped on here a little late. Talk about the reserves and talk about doing a cash out. Can that be used for reserves?
Yes, your cash out can be used to cover your reserves. So again, don't be worrying if a borrower is cashing out and they don't and they're struggling to put statements together. Maybe they have it in their LLC, which by the way, we can use assets from businesses for reserves on the DSCR program. I've had that question a few times. But for cash out purposes, you can use the cash out, the proceeds of the cash out to cover your reserves. So don't be worrying about reserves if it's a cash out transaction.
Yeah, and Jack, I love the way Stacy always positions this. Is so we only require 30-day seasoning, right? For
30-day seasoning. So we're
yeah.
going to look at the beginning balance of the statement, ending balance of the statement, and source or season any deposits over that 30-day period. Again, we're only looking at the beginning balance of that statement and the ending balance of that statement, okay, and anything else in between. So anything that comes in before, we wouldn't look at. We're just looking at that 30-day bank statement seasoning.
So, thank you, Jack. Oscar, I'm going to ask you two questions here. Can you do this program for new construction?
For new construction, well, that's a bit of a two-part question.
Yeah.
So let's say that I've had scenarios where, so this program is really comps are always really important on the program, for starters. So if you happen to have, if it's in an area where we're not going to have any comps, then that can be an issue. Now, if there are comps in the area, then that should not be an issue. But we don't do construction to permanent. So if someone needs a construction loan for the construction financing, that isn't an option that we offer.
And then I'll answer this question for Graham. Graham's asking, do we allow DSCR on manufactured homes? Unfortunately, Graham, we do not. Sorry about that. Trying to come up with a few other questions here. Jack, do you allow 1031 exchanges?
Yes, we do. Yes, we do. So any 1031s of a borrower selling a property puts in the exchange, we can use those proceeds on any DSCR transaction. So you are good to go with 1031 funds. If it's similar to, okay, if you LLC with the 1031 exchange, again, we can vest LLC on title. So that's very common where you'll need to vest the LLC on title to access those 10 or an existing property was sold in the LLC. We can vest LLC on title on a purchase transaction and access those 1031 funds.
Thank you, Jack. And I know we've been going back and forth here a little bit and talking about multi-packs and, so it sounds like seasoned investors. Oscar, is this for the first-time investor?
We're fine with first-time investors, but not first-time home buyers.
Right. Now, we've gotten a few exceptions, like if they're buying an investment property and they live like in New York or, where it's not common to own a primary. We've gotten a few of those
Yeah.
done, but it has to truly make sense, and it really can't be someone wanting to purchase a second home or a primary under the guise of the debt service coverage. So, kind of just looking at some more questions. I know we're already halfway through. Okay, Jack, here's a question: how quickly can you close these loans, right? And how long does it take you to usually do a prequel on these?
Yeah, of course. So that's a great question, John. I'm glad you asked me that one. So to close for a pre-qualification, same business day, right? You submit it, I can get it back to you within the same business day. Okay. We're not looking at it's not bank statement where we're looking at income calc, et cetera. Typically, I can turn those over pretty quick, but for every account rep, I would say within a business day we can get that back to you. Okay. As for closing, we have self-disclosures now, by the way. I'm not sure if we've touched on that
Oh,
because this will speed up the process for you. Okay. We have self-disclosures in 21 states, I believe. Is that correct, guys? I think it's 21.
20. It's
And
20 now. We just
20?
20.
Okay.
Yep.
20. And it's constantly growing in that aspect. So you can register, let's say we turn over the pre-qualification same day. Same day, you'd be able to register your loan in our system with a 3.4 file, with your 1003, et cetera, and self-disclose if it's one of those states. And we're working on all 46 to get those out for you. But you would be ultimately be able to disclose to your borrower the same day you submit your pre-qual and potentially submit it to underwriting the same day that you submitted your prequal. So, and then we just go based off of underwriting turn times. As of right now, it's 2 to 3 business days. Just depends on volume as a company. But it's 2 to 3 business days on initial submissions, 2 to 3 days on resubmissions. So ultimately, we can get about 4 resubs in about 2 to 3 weeks. So most of our DSCR loans, just as a whole, I would say on average, if you're a first time DSCR originator versus an experienced one, first time I would advise, hey, within about 17 to 21 business days is our average turn times for DSCR. Okay, if you're experienced, but we can definitely get those done quicker. Okay, it just depends on how much experience you have, what kind of documentation, if you're prepared, if you're familiar with the program, what to request from your clients, and that's also what we're here for too. Is ask us if you don't know. Okay, we can make you experienced, but just make sure you're relying heavily on us. Okay.
Yeah, I think, Jack being here 5 years, Oscar 8 plus. I hopefully everyone is coming across that these are the subject matter experts, right? You guys and Oscar always used to use the expression, you're going to be the lifeguard and when they jump in the deep end of the pool, right? And you're going to be there every step of the way for them. So that's what I love about working with all the AEs at Angel Oak. I mean, they're all experienced. They all know the process inside and out. And you should feel really, really, really comfortable working with Angel Oak. So let's get a couple more questions and then we'll, the question of rate has not come up, but we're going to show everyone here today how they can get the rate. So, Jack, this question I'm going to give to you because you brought it up. If there's 2 borrowers, which score will we use?
The middle. The middle of the higher.
Yeah, there you go.
The middle
Wow.
of the higher 2 FICOs. So yeah, again, that's a huge advantage if one of their credits is struggling, one of your borrower's credit mid FICO scores is hurting. We'd be able to use the higher of the 2 mid FICO scores. Okay, so huge advantage there. So when you're going to the pricing engine, and John, I'm not sure if you want to make your way over the pricing engine or if we're just going to cover that in a little bit, but
Wow. Now first time he's telling me what to do. This
Yeah.
guy.
hey, all hands on deck, John.
Hey, and it's not like you ask the guy for a ride one day and he never shows up, but that's a different
Okay.
story. All right, Jack.
Man, I guess I backed myself into that one.
Jack, let's show us how to get to the quick quote, please.
Yeah, so from our homepage, you're going to click on the non-QM quick quote up in the upper right-hand corner, or from the second icon from the left. Either one will work. And from there, you're going to be able to plug in your situation, your scenario of your borrower. Again, higher of the 2 min FICOs. And another important thing to notice is we can use a soft pull with at least 2 bureaus reporting for credit. So again, if you're trying to pre-qual but don't want a hard pull, don't want the trigger leads, you can go that route.
Hey, Jack, as I'm filling this out, I think one of the things I wanted to bring up was talk about housing history that will allow a 1 times 30.
Yeah, of course. We'll allow 1 by 30. So even if they have a mortgage late, we would still be able to close the loan for you on a DSCR loan. So again, even if you have a few loans, 3, and you can't find 1 payment, maybe you just can't document it. That's okay. We can still close your loan because we allow 1 by 30 in the last 12 months.
Sorry, I missed this. Here we go. So just to recap, right? We've got a $350,000 loan amount, 740 score, 75% LTV, 1 unit purchase DSCR. We're going to assume that it's a +1 ratio. And go ahead, Jack, tell them what we have here, man.
Yeah, that's a rate right there, guys. So,
Right.
but yeah, right here, obviously you'll see your pricing for a 75% loan to value, 7.124, fantastic rate. I mean, it's right as of right now, it's bordering, your agency right now. I mean, that's an incredible rate. Okay, get me close to conforming. On a DSCR no income doc, not verifying all of your private mortgages. I mean, guys, it's never been easier to close investment property loans on a DSCR program. It really hasn't. So I mean, if again, even if you have a fallout investment property where it's taking you 60, 90 days, give us a call. I mean, it's worth a shot. Give me a call.
Right.
I'd be more than happy to see if we can make it work.
And guys, I
Yep.
want to add to everybody, whenever you're shopping rate, right, you're looking for a rate, you're looking where you're going to place your loan with your customer. A lot of lenders are going to give you their best pricing. So best pricing on a DSCR loan can be with a 5-year prepayment penalty with most lenders. So here we're defaulting to the standard of 3. If we change the prepayment penalty to 5 years, that will drop.
Is
It's
it maybe?
it's the state likely.
States,
So yeah,
Georgia.
yeah. So there are states, if we change that to Florida, there are states, we do have to follow state law. So there are states that have different prepayment penalty restrictions by law, right? But as you can see here, Florida happens to be a state where prepayment penalties are allowed. Now, like I said, a lot of lenders will just give you their best pricing without mentioning that it is coming with a 5-year prepay. We're going to default to 3 years, but you have the option of going up to 5 if the state allows, 4, 3, 2, 1, or none, right? So all those options are here available in our quick quote for you to price out.
Yeah, and John, can we touch up on short-term rentals again too? Because I think that's such a big advantage right now.
Yep.
A short-term rental, especially on a larger property, because AirDNA is so aggressive on their rents. So again, you have a larger property, you have a 500, 600, $700,000 property, it's not going to cash flow, right? The larger the property, in order to get that thing to cash flow with fair market rent value on a 1007, the appraiser's not going to know what to put for that fair market rent value. It becomes extremely difficult. So if they're going to rent it out short term, I see a lot of times those larger properties are short term rentals. The AirDNA, I can't stress enough, it's only 25% down for these larger properties.
Yeah.
And then obviously you'd go to your AirDNA to make sure it cash flows. Granted, the rents are so aggressive, and upfront, the benefits are you're going to know upfront before we even get the fair market rent value back on the appraisal. We know immediately if the loan is going to work at 25% down.
Yeah, because typically people that are buying properties for short-term rent that are going to be buying in vacation markets, those are already going to be luxury properties at higher values. So that is the power of AirDNA. And I want to point out one more tool. It's right up there where it says calculators. We have a DSCR calculator. So that's going to help you structure your loan, because the moment that you're done pricing out your loan, you want to visit our DSCR calculator. If you have a refi, or if it happens to be short-term rent, again, you're in the driver's seat. You know what your rent is. So all you need to do is enter the rental income, and then you're going to plug in all the other fields. You're only looking at about 5 or 6. Once you're done with that, it will give you the fixed principal and interest. It'll also tell you what your debt service coverage ratio is. And on the right side, it's going to give you what the DSCR ratio may be interest only. Interest only is an option that's available on other programs, but it is also available on the DSCR program. Sometimes you may be at, let's say, 0.98 using annual rent on the right side, or a fixed rate on the left side. But you might see that on the right side, your DSCR ratio is above 1. If your DSCR ratio is below 1, when you go to pricing and you make that adjustment, you will notice that there will be adjustments to the pricing and sometimes the rate. That is because of the added risk, right? That it's taken on as a lender. So that is added to rate or cost. But it may get you back to a DSCR ratio of 1 if you go interest only. And so that is a good cost price comparison for your client. A flexibility and security, the flexibility and security of going interest only with us is that your client has the option to pay the interest rate, but they also have an option to pay towards principal. And on top of that, they can recast an interest only loan.
Yeah,
And
Oscar, I've heard that's. Go ahead, Jack.
I was going to say, and this is huge. I mean, this is where our customer service basically kicks in, right? If we're an underwriting, right, and you guys are struggling because it's a 0.97 ratio, 0.98, right? This is where we like to pride ourselves on is just call us. We can help you get this through. We can get it above a 1.0 ratio. We can go interest only. We can change your lock. We can do all of this for you. This is where we excel, and this is how I like to serve my clients is, guys, just call me if you're struggling. Don't freak out if you think the loan's not going to work. Call me because I'll be able to restructure your loan in underwriting and get you to the closing table. Okay.
Hey, Jack, thank you for saying that because I've heard that saves so many deals, probably over the last few months. So, hey, a couple last questions here. And then Anna's asking, how many units do we go up to here, Oscar?
Up to 4 units, 1 to 4 unit properties. Yep.
And then the other question was of the rent comp. Do we use 100% of that or 75% of that?
100%, whether it's annual or short-term rent.
Yeah, thank you. And that's huge. That's big too.
That is a big deal.
All right, Jack. So then, we talked about rates. We talked about our calculator here. I'm going to go back to the quick quote here. I've got to go fill in a few more here because people are going to want to know, how do I get it, right? How do I get a pre-qual to you, right? So
yeah,
let's,
so as John's plugging in, yes, you're just going to plug in your specific scenario. I'd also like to point out, if you don't see your scenario, just call me, okay? Because if you think it's supposed to work and it's not showing up, don't give up. Just call me, because a lot of times it could be something like a 5-year prepayment penalty in Georgia, right? Like that's not allowed, but in Florida it is. So I can advise, hey, you need to adjust your prepayment penalty. So if you're not seeing your program come up below, just call us. We'll be able to help you out there. In this specific scenario, you see the rate come up, John. Go ahead and proceed on this one. And you're going to select your rate option after clicking that blue View Rates button to take you to the pre-qual submission page. The next step, it's going to ask you for a MISMO 3.4. If you already have your file printed up as a Fannie Mae MISMO 3.4, you can drag and drop it in here, your XML file. If not, it's okay. I can use a PDF 1003. You just click the next button to skip it. And then here you would input your account executive, Jack Stevenson, Oscar on go. And then you plug in your company information, your NMLS, your name, your email address, phone number, your borrower name. And then for everything that has an asterisk next to it, we need documentation or information in those buckets. So 1003, you're going to drag and drop your PDF 1003, your credit report. We can use obviously the at least two reporting bureaus on your credit pool. So you'll drag and drop it into there. And then at the very bottom, you're going to hit your submit button. If John, there you go.
Yep. So, and Jack, you said, you can get these done same day because you're really looking at the 1003, the credit, you're doing your legwork. Like Oscar said, you're looking at whether it's Zillow, AirDNA, to make sure that based on the payment you've calculated that it's going to cash flow, and it's not, that's a conversation you're going to have with your loan officer. So,
yeah,
so let's,
John, I just want to add, now that you mentioned that, one of the most important thing on any, regardless of it being a DSCR loan, but extremely important on a DSCR loan, is the transparency with your clients. Do let them know that there is a lot of flexibility. Again, this is nearly a bulletproof program as long as they have the credit and the assets for it. But you want to be transparent with them because of the moving parts. So you do set the expectations with them about the different DSCR requirements that impact the loan to value, and whether or not that will be that may require another 5% down or restructure of the loan. This way they aren't caught off guard, because there is a lot of speed, and this is a very streamlined program. As we mentioned, we can potentially get you a conditional approval within 2 days by using the self-disclose feature and auto submit feature. However, this is a non-trade loan, so we do not send out pre-CDs. So between the moment that you disclose until the moment that you begin to balance the fund, there is not another LE that's going to go out to your customer. So if anything changes in the process, especially once that appraisal comes in, and if you have you're using annual rent, let's say that your average market rent, again, like I said at the beginning, impacts your DSCR because it's less than a 1 ratio, then you obviously want to have the conversation with your client of that being a possibility. We're going to do the best homework we can. This way, again, they're not caught off guard.
So Oscar and Jack, either one of you guys, we're not asking you for any credentials up to this point, right? You don't need any credentials to work or run a quick quote or anything like that. So Oscar, let's talk about, and I know this is a favorite one of yours, and I timed out. I'm going to hopefully get this. Oscar, fill the space for me while I'm trying to make sure I remember my password.
So yeah, there is no password, login credentials. You don't even need to be signed up with us to do what we just finished doing, which is pricing out a scenario, using our DSCR loan calculator, even submitting a pre-qualification. Anybody on the call is not set up with Angel Oak. We can actually vet one of your loans without you getting signed up with us. So that is a possibility. If you're not signed up with us, let us know in the chat feature, and we'll get you we'll get you assigned to your account executive. Now, for you to use our marketing content, which I would say is underutilized, right, John? We always say this is underutilized. For you to use marketing content, you do need to be set up with us. The marketing content is absolutely free. Don't need to pay anybody to do your marketing for you.
What was that? It's free?
The content is free. The content is free. Now, not doing it can cost you, right? So we want to make sure that you're set up with the social media flyers. We want to make sure that you're set up with social media images, and all of that has been done for you. No need to reinvent the wheel. So what John's done is he's already logged in. This is the training portal, but this is essential. This is exactly what your portal would look like. To visit the flyers or visit any one, or to view any one of the either flyers, presentations, or social media images, all you have to go to is that cascading menu under marketing portal, and you'll select what you want. If you're looking at flyers, then this is exactly what the view looks like. And we have a flyer for every program, even transaction types, or the purpose of the property, whether it's going to be investment or owner occupied. We also have
hotels, right?
Exactly, hotels, etc. We have flyers for foreign nationals, and we have them for realtors too. Nearly 10% of the loans that we fund, I would say, are for realtors, and we see. I think that we've always said, if you get 10 realtors in a room, you're going to walk out with a loan, especially when you cover the DSCR program. A lot of realtors also are investors.
Oscar, we don't know. Almost 10% of the loans we close on our bank statement.
On our bank statement program, correct.
Are realtors. We don't.
Yeah, but because we don't look at employment. Yeah, because we don't consider it employment. Who knows how many realtors we get on DSCR? You're
exactly.
Right. Yeah.
So I do want to cover one thing. So this is an example of a flyer, but we're taking down our flyer. For full disclosure, we're going to be taking down our flyer website to make some enhancements and update the content and everything there. So if you do want a flyer, you're going to probably for the next 4 to 6 weeks going to have to reach out to your account executive directly to get that. So, and then the other thing I'll talk about here is if people want to reach out, not sure who your account executive is, this is actually my contact information here. So feel free. It's 214-683-6096. That's my cell number. This is my email address. So after this, anyone can reach out to me. Sorry, Oscar.
Oh, no. I'm glad that you mentioned that. Yeah. So at the moment, it'll be under construction. We're going to make it even better. If you want a flyer, just reach out to your account executive. But as you can see, it was very simple to use. All you needed to do was enter your information. So as long as you know your phone number, how to spell your name, and if you have a picture,
so easy, I can do it. Is that what you're saying?
Yeah. If you have a picture of yourself, you just upload it. You can upload it there. We've seen a lot of co-branding done too over the years. So yeah. We've seen loan officers co-brand with realtors on properties or on programs. So this has always been very easy to use. And the moment that you fill in your information, you don't have to re-enter it. If in case you want to generate another flyer, all you have to do is click the drop-down menu there at the top. At the moment, it says investor cash flow. Let's say that you want to go with bank statement program. You just choose that. It auto-populates and fills out for you. Then you download it. But for the time being, just reach out to your account executive, and we'll get you set up with the flyers.
Yeah, and this is a test site for me, so it's not as fast as it usually would be, and that's the other thing, the improvements we're going to do. It's going to be a lot faster too. So
yeah.
All right, Oscar, let's talk about some other things here.
Yeah, so let's talk about some presentations. I would say that Jack and I probably do this once or twice a week at a minimum. We don't just set up training calls with you and your team to do continuing education on non-QM programs. We know that you're calling on your network and you want to build referral sources. So that's some value that we will also bring to the table too. If you want to present to a group of, let's say, realtors, and if you want an in-person presentation or even a Zoom presentation, you may not have Zoom or GoToMeeting or let's say Microsoft Teams. We have those resources. So, just the other day with a longtime customer of mine, he set up a Zoom meeting with about 49 realtors, and he invited me on that call. And we talked about the different opportunities for them to build their business. It is impactful. The amount of questions that we get, the energy is always great. And so I love whenever I'm invited to participate. What is it? What's the saying, John? You can say that we are. You don't necessarily have to mention that we're with Angel Oak or anything.
Yeah, the witness protection program,
Yeah,
right?
yeah, the witness protection program, exactly. I'm introduced as representing one of the investors, but at the end of the day, you are the star of the show. They call you, but we will go over different ways that we can help them build their business with a DSCR loan or a bank statement loan. How they can land listings. If you're new to this call, let's say that you're a new loan officer, I'm going to leave you with just a tip, because I'm grateful enough to have heard some of my customers cold call when they want to build their network. I have not heard, I think that they are, let's say 100 for 100 when they make this call and they make this proposal. You call somebody and you tell them that you're going to teach them how they can grow their commission this year. No one's going to hang up on the phone with you because you're not charging them anything. If anything, they should be paying you, right? But you're going to do it for free. So you're going to reach out to your realtor customers or your existing relationships, and you're going to set up calls to teach them how they can help one non-QM buyer a month. Take the average purchase price in your area, and then the average commission that a realtor's earning, multiply that over 12, and then that's what you're going to have for what they could potentially earn in that year. If you tell them they could potentially earn, you're going to help them potentially earn 100,000. I doubt that they will not invite you over to the office to present to them, right? So extremely impactful, and these presentations are already done. They're completely unbranded, and all they're missing is your information on them.
So two things there, Oscar. Nathan on this call is already saying, boom, setting up gatherings right now, which is awesome. Good, Nathan. And two, I would challenge everyone on this call, just Google search real estate investment clubs. I had an AE here in Dallas do that. He stopped counting after 20. So I would take Oscar, Jack, any of the other account executives across the country and bring them to a real estate investment club and have them present debt service coverage ratio for you on your behalf. It's powerful, guys. It's really, really powerful. And these presentations, like I said, I've counted. Let's talk. We're getting close to the top of the hour. So, Oscar, let's talk about social media.
Social media. So all these, LinkedIn, Instagram, Facebook, Pinterest, they have different dimensions for their photos, for the photos so all these things have been done for you. And we have them set up. Now, even if you're newer to non-QM or you have not done, let's say, a DSCR loan, and you're not comfortable with what you're going to write in your caption, guess what? We've already done it for you. So you'll notice that there are also captions that whether your audience is going to be a borrower or a realtor, it's already been pre-written. All you need to do is copy and paste, and then downloading the images is very simple. You just click on it, right click, and click save to your desktop, and you're done, and you're ready to go ahead and post it.
Oscar, I counted between the social media, the flyers, and the realtor presentation. We have about almost, I'd say at least 70 pieces of content. That's
Wow.
70.
Yeah.
You could put a marketing campaign together every week
Yeah.
and still not run out of information.
Uh-huh.
It's I get this is where I get, we talk about this. Everyone's going to, we're going to end this webinar and people are just going to go back to doing the same old, same old. Well, business, Mortgage Bankers Association plans for this year to be flat to last year. So what are you going to do to get market share? And what are you going to do to grow your business? We've given the tools here, and we've got the subject matter experts here. So it's, I know we're just over the hour. So Jack, anything you need to add for marketing, or anything you want to add in closing?
Yeah, we just want to help you guys with your referrals, right? All it takes is landing one of these, especially in those real estate investment groups. Just land one, give them a good experience. We'll help you close the loan, and then just get those referrals. See them pile up. Okay, this is what we're here for. We're here to help you and serve you guys. Okay, at the end of the day, just call us if you don't know if it can or can't work, or you might have a potential client. Just call us, and we can help you out if it's marketing related, anything related. That's what we're here for. We're in the customer service business. We just happen to be doing loans at the end of the day. So.
And Jack, really well said. And you guys, the experience that you guys can ask the second, third level questions to get maybe to a yes, but you're also smart enough to know what's not going to work and not waste everyone's time. Oscar, anything else in closing?
Yeah, for all of you, for that 50, 51, 52% of you who have not done a DSCR loan yet, please mention it in the chat feature. Please make sure that you get assigned to your account executive, and invite us on a call. We'd be more than happy to take 15 to 30 minutes. That's really all it takes, especially if you want to do just a follow-up on the program or any other program. We'd be more than happy to set up a call with you, and you will be a subject matter expert.
Yeah. And shameless, this is my contact information. If we didn't get to your questions, we will have an account executive reach out, or if you need something immediately, contact me. But next week, same time, we're going to do a bank statement, deep dive into bank statements. So, there's 400 plus thousand new business formed every month, and it hasn't slowed down since COVID. So why not become a subject matter expert on self-employed borrowers? So, and in closing, for those of you who have closed a loan with Angel Oak, thank you for trusting us with your business. For those who have not, I think you can tell by these subject matter experts, you can trust us to close your loan. And on behalf of everyone here at Angel Oak Mortgage Solutions, thank you for joining us today. Have a great day. Thanks, Jack. Thanks, Oscar.
All right, thanks, John.